Thank you so much all for joining. This is Prashant Kumar from Cashflow Champs. Along with me, I have Paul Senior, my co-host. He is watching and just making sure that, I'm doing a good job. For logistic purposes, please put your questions and answers in Q&A box. Again, I'm Prashant Kumar. I'm a, certified commercial investment member, CCIM. Just a little bit about disclaimer about this presentation. I'm not an attorney, financial advisor, tax advisor, accountant. The purpose of this webinar is for information purposes only. Please seek professional advice from appropriate personnel. I am, my introduction, as I said, I'm CCIM. I'm in real estate for last 7 years. I'm married, I have 2 kids. I live in Long Island. I'm managing partner in Cashflow Champs. I've done IT consulting for multinationals over the last 25 years. I'm a co-host of Cashflow Champs Real Estate Podcast. Our team's portfolio at Cashflow Champs is $146 million. We have about 1,650 doors in management. I personally have had about 2,000 units in past, of which I currently have about 1,000 units. Obviously, I love helping others, and I love multifamily and assisted living space. I like to meditate regularly. That keeps me sane. And I like to help others to meditate as well. That's the passion of my life. Before we begin today's webinar, Understanding T-12 and Rent Roll, just a little bit about Cashflow Champs. If any of you wants to talk to us, please feel free to scan the QR code on the left-hand side. Just no obligation call. We have free underwriting sessions that we have been doing for last, couple of years, 3 years, 4 years. On Saturdays, if you want to register for that, please scan the middle QR code, or go to cashflowchamps.com/underwrite. In addition to that, we have an inner circle where, we coach our, associates and students and become active real estate syndicator. Many times we end up doing deals with them. They end up becoming part of our deals also. But if you are interested to know more about it, please scan the last QR code on the right-hand side, cashflowchamps.com/coaching. So what are we talking today? Let's get started. We are talking about T-12 and rent roll. What is T-12? And we will understand various components of T-12. You will understand various components of rent roll. What are the best practices for proforma business plan, and many more. I mean, this is a vast topic, and this is the fundamental of our underwriting. So, take notes. Any questions? No question is a dumb question. Please feel free to ask any question. We can go as deep as you want. We can be as high level as it, as questions arise. Okay. So let's get started on this basically. So what are the two main components of a T-12? So what is T-12? Why do we call T-12? T-12 is a trailing 12 income and expense operating statement, commonly known as T-12. What is T3? T3 is trailing 3. So last 3 months. If you are in April, it means last quarter. If you are in May, it is February, March, April. So it is trailing 3 months. Similarly, T-12 is also trailing 12 months. So we are currently in March. So it would be basically from March to February. March 2022, February 2023 would be the trailing T-12 for us for any property. So we call it trailing T12. It is basically previous 12 months worth of income and expense, basically. So there are two major components on T12. One is income and second is expense, right? Income minus expense is net operating income. Let's talk about income. On a T12, you would have gross potential rent. You have, let's say 100 units, and, some units are $750. I'm just making it up. Some units are $800. So what is the gross potential rent? If everything is full, that is the top line of your income that I have, my monthly gross potential rent. It is not the rent that you receive. It is the gross potential rent that you have. Is if everything is 100% full, how much should be my gross potential rent? And on that, you apply, any other income, basically, or any promise to pay. It could be if COVID relief, or it could be vacancy. If you have gross potential rent of $10,000, but your vacancy is 30%, you have to subtract that, basically. Or you have bad debt or recovery, for that matter. So all that needs to be added or subtracted from the gross potential rent to find what is the effective rent. Once you find the effective rent, so let's say you had $10,000 of gross potential rent, but after subtracting and adding everything, your vacancy, your promise to pay, and all that, your total effective rent is maybe $8,000 or maybe $9,000. On top of it, you will add anything else that you would charge your tenant. Sometimes you charge for water, gas, sewer, pest control, trash, any other fees that you would charge your tenants, you would add that there. And similarly, any revenue, like washer and dryer, pet fees, late fees, admin fees, application fees, or any other miscellaneous income. You may have Wi-Fi, that you are providing at a cheaper price, or you may have a bulk order for Wi-Fi, and you may be charging tenants $50, but you get that Wi-Fi for $35. So there is an additional $15 income that you have. And then you subtract, of course, delinquency. If the tenants, if there may be some non-paying tenants, who are delinquent for 30, 60, 90 days, then you have to subtract that to calculate the income, what you will get. That is the fundamental of the whole business, income. Gross potential rent minus all the bad debts, adding any utilities, revenues. You add all that and find what is the actual income that I get, actual revenue that I get from the property. Once you have the income, you want to see the expenses. Basically, income minus expense is your real net operating income, right? So we can divide our expenses into two categories: operating expenses and non-operating expenses. Some of the expenses are controllable, and the expenses are, you cannot control them. So in operating expense, you have payroll, which you can control. Obviously, you can add more personnel as you need, or subtract them. You have G&A, general and administration, that is controllable. Advertising and marketing, which is controllable. It depends on you how much you want to spend. You have contract expenses, you have trash, you have landscaping, you have any other pest control, maintenance guys, any contracts that you have with any outside vendor, right? So that is controllable. Similarly, repair and maintenance, how much repair and maintenance do you want to put into your property? There could be some deferred maintenance. You may choose to proactively go and update the units and avoid future maintenance. So some of these are controllable. You can control these expenses. Utilities are not controllable because they are what they are. You have to pay the bill. Similarly, taxes and insurances are non-controllable. And obviously property management, whatever contract you have with the property management, You have to pay them, whether 3%, 4%, 5%, whatever it is, that is non-controllable because it's percentage of a revenue. So other operating expenses, other non-operating expenses on the property could be your CapEx, the improvement plan that you want to put in on the property, your mortgage interest, and your asset management fees. Basically, on any property that you are managing, basically on top of the revenue, there is an asset management fees which an operator takes. So these are non-operating expenses. So you found the income, you found the expenses, and you subtract income minus expense is your net operating income, basically. So hopefully that makes sense. If there are any questions, feel free to ask in the Q&A box. And again, thank you so much for your time. So understanding T-12, right? I mean, the important thing in the T-12 is when you receive a T-12, when you are looking for a property, what are the 3 documents that you want to ask the broker? Your T-12, your rent roll, and any other information which they try to put in offering memorandum, right? So when you have a T-12, you try to look for patterns, right? You have monthly buckets. It's not 12-month data summed on one side. You have January, February, March, April up to December. So every expense category which I mentioned in my last slide or income, they are categorized by month. So when you look at monthly data in an Excel spreadsheet from left to right, January, February, March, April, and so on, you see how things are changing month to month, so you have to see the pattern and read through the numbers. I mean, brokers probably will not give you so much insight, but you have to see whether the occupancy is getting better or collection is getting better, or the debt or the interest rate is going up, mortgage is going higher. If it is an adjustable rate, is there a trouble sign? What at the end you want to see what is the cash flow? What is the net operating income? Is it going up or down? There could be a water leak. So somewhere in between, you may see a water bill, going high, and you have to ask those questions. Why these 2 months were your utility bills are so high? Was there a leak on the property which caused the water bill to go up so high? So you have all these. It's like a grid, and you can see each line by line and see where there is a pattern. If it is consistent, same range within 5-10%, then it is okay. But if there's a spike somewhere, then you need to know why that happens. Or at the bottom line, is the mortgage going up, mortgage interest going up, although mortgage is after NOI, before the cash flow, but sometimes they give you the mortgage interest, how much they are paying. So if you see that line, you can figure out that, the seller is in trouble, that he doesn't have cash flow on the property. That's why he's trying to get out. So it is extremely important to analyze this, and we go through this exercise in our underwriting sessions, and they are free sessions, by the way. Never in last 3 years we have ever charged any money. We go through that every week on Saturday at 4 p.m. Eastern. We look at certain properties, we go through them, T-12 and rent roll at a deeper level. And again, I'm here to answer any questions that we may have. So one is historical, okay? What seller has been doing. Now you have to underwrite your property. What is your comfort level? When you buy a property, you want to say, okay, these are historical, but how I'm going to underwrite my property? What is going to be the pro forma for me to make sure, and I want to build in some cushion so that I can so that I can make sure that I'm going to make some money on this property. We are going to make some money. So, I'm just giving some very high level numbers. you can take a screenshot of that. But when we underwrite properties, again, we have certain benchmarks. We say, administrative expenses anywhere from 250 to 350 per unit, depending upon the property. Similarly, we go for advertising, $100 to $250. By the way, these are yearly, right? So it's not monthly. So we underwrite our property for the whole year. These are the expense categories, and this is what we will charge. We will underwrite it for. So administrative expenses anywhere from 250 to 350, advertising anywhere from 100 to 250, depending upon where the property is. Real estate taxes, obviously you calculate real estate taxes, but maybe you will say, okay, they may go up by 10%. Insurance, you can check the insurance. You need to make sure you call your insurance agents, find out at the purchase price what is going to be the insurance. So you say ratemap.org, that gives you some insurance details in terms of how much could be the insurance. You have contract services. So what all contracts do you have? You have landscaping, you have trash. Landscaping and trash are the most common one, but then you may have Wi-Fi contracts, or you may have TV contracts. So all that you need to underwrite. Similarly, you have property management, depending on what kind of property management contract you sign. It could be anywhere from 3 to 10%. It may be all inclusive, or it may be property management plus payroll. All depends on what you do on that. Similarly, trash removal, you have electric on the common area, water and sewer, phone lines, payroll. Basically, payroll is an important one, right? $1,200 to $1,500 per unit. Repair and maintenance anywhere from $500 to $1,000. And then you want to reserve some money for capital expenses also, anywhere from $250 to $300. So these are some basic guidelines that we use for underwriting a property. We saw the historical income and expense. We are going to see what is for our underwriting, what are our future expense should look like. And these are some of the pro forma numbers that we use depending upon the area. So on T-12, as I said, we try to look for the patterns. And similarly, we go into rent roll, right? Basically, rent roll is what? T-12 is the historical data, but rent roll is a snapshot as of right now. As of right now, what is happening on the property? Rent roll is not for a duration. T-12 was for a duration for last 1 year. Rent roll is right now what is happening on the property. So whenever you buy a property, you ask for what is the current rent roll, what is the historical T-12. So current rent roll would include your unit type, square footage, who's the tenant, what is the current rent, and what should be the market rent for that property. So it is property manager's job, even though tenants are there in a property for a year, on a monthly or quarterly basis, they should update the market rent for each unit, so that you know how much you are above or below the market, right? How much you are losing. If the rent is $850 and the market is $1,000, you are losing $150 loss to lease basically per month. The day you rented, it was $850, but slowly the rent has gone up to $1,000, but you are still getting $850 because that's how your lease say. So you have to make sure that your property manager is putting market rent in the system, so that you know what is the potential when this lease renews, how much would it renew for, right? Similarly, any recurring charges, besides rent, what all other things that this unit is paying? Maybe they are paying for your Wi-Fi, maybe they are paying for TV, maybe they are paying for water, sewer, trash. So all that needs to be updated, and it should be buttoned up every month, every quarter. What is the lease from and to date? When did this guy move in? So those dates are there. And one of the most important thing is, what is the balance? What is the delinquency? So the rents are typically due at the beginning of the month, every month. And is there a balance on this guy? Has he paid the whole thing? Is he delinquent? And that balance is how many days. Delinquency is typically, you have separate column, 30, 60, 90 days. You ask for, basically delinquency days is that he's delinquent by so many days. Every date keeps on changing, right? So today is 5 day, tomorrow he doesn't pay 6. So, and then there is a report in the end that tells you that you have so many tenants who are delinquent by 30, 60, 90 days. So most important column for us to look at. And there also we look at the pattern. How many tenants are delinquent as of today? Basically, how many are more than 30 days and more than 60 days, and that kind of determines that whom you are going to file for eviction. So very important piece of information that you can get from rent roll, number of tenants, which are behind more than a month. How much is your exposure? Your rent, based on your effective rent, you are supposed to receive $9,000, but you have balance sitting on so many tenants. How much is your exposure? If these guys just move out, don't pay you, how much you would end up losing. So all that information is present in the rent roll. And as you continue, so you get into a contract on a property, let's say today, but before closing, which is anywhere from 60 to 90 days, you basically find out every month. You ask for this information from the current property, existing property management, or from the seller, and that information is needed by bank, because bank wants to make sure that current seller is not taking the property down to the ground, or at least is not worsening in any way, and they want to continue to underwrite every month to make sure that whatever rent is supposed to be received, it is coming in, and property is running the way the seller has promised that it should run. So very important documents, T-12 and rent roll. Guys, come on. I cannot emphasize. If you want to understand more of this, we discuss T-12 and rent roll and underwrite properties in our underwriting sessions on Saturdays. Again, those are free of charge, just making sure that everybody understands that. So any question? I see there are some questions here. Let me see. Yeah, so will you be going, so Ria asking, will you be going over your suggestions to organize rent roll for underwriting? So basically for underwriting, the rent roll basic is by the unit. I have not prepared a slide for that, but let's say you have 40 units. I'm just making it up on the fly. And 20 are, let's say 20 are 1 bedroom, 1 bath. Second is 10 are 2 bedroom, 1 bath, and third is 2 bedroom, 2 bath, right? So 20, 10, 10. So you will create a basically table for each unit type, and make sure that then you have 1 bedroom, 1 bath, 20 unit. What is the market rent? And you want to create it that way, basically. And you want to find out what is the current effective rent and where is the value add, right? So you have current rent, you have the market rent, and during your life cycle of the project, because we are multifamily operators, we increase the rent, right? So during, what is your projection? Your your gross potential rent today is $10,000, but is that where you want to operate your property? But I think you want to operate your property at a higher rent because that gives you more income. So you want to see that my current gross potential rent is 10,000, but if I increase my rent by, for 1 bedroom, 1 bath by $75, 2 bedroom, 1 bath by $100, 3 bedroom, 2 bath by maybe $150, whatever is the market, whatever is the market saying, how much should be my gross potential rent. So all that would be done in a small Excel spreadsheet. I don't have that slide for me, Priya, but good question. Can you provide resources to refer to if market rent is not included in the rent roll? There are many websites actually. So you have, in terms of the market rent, the important thing is you just go to apartments.com, right? On apartments.com, you just go look for a property in that area, wherever in a particular zip code, and there you can see the rents of that units basically which you are trying to get. So that is one place, apartments.com, that can give you a hell lot of information. And of course, when you have OM given by the broker that has information about market rent, typically market rent is present in CoStar report, which your broker can provide, or Yardi Metrics. There are many other websites, but apartments.com gives you almost all the information. Thanks, Riya. So basically, again, T-12 and rent roll, as I said, but the important thing is how you want to, what do you want to achieve, right? It's not just what you have. Again, I'm just going through a few things. How do you want to, the important thing for you is how do you want to reduce your expenses? How can you do that? At what conservative cap rate are you buying? When I say conservative cap rate, means higher cap rate. You want to see how much the rents are below market currently, and are there opportunities for additional revenue stream, right? Or there is any other way, you can reduce expenses. So you need to look at those things very carefully in T12 in your analysis. What are my rental increase possibility? Is there economy of scale? Maybe you have a property nearby and you want to use the similar resources across the properties, right? So is there any liquidation event happening on your other asset which could help you to grow the revenue on this one, right? The new property that you are buying. Or what are the additional revenue stream you can generate? Maybe Amazon box, Dropbox, or valet trash, or as I keep saying, Wi-Fi, bulk Wi-Fi, or bulk internet, bulk TV, and all that can be done. Maybe you go to an institutional investor where you can get cheaper equity so that your investor returns go higher. So a bunch of things can be done. Again, as I said, these are some reduction in expenses and upside potential examples, but there are some benefits that you don't see, which are unseen. Things like bonus depreciation, which potentially can reduce the taxes. Again, I'm not a tax advisor or CPA, but bonus depreciation, primary reason a lot of people invest in real estate is because of the bonus depreciation, because they can write off a lot of it to defer their taxes for future, right? And you want to see, that you had bought in assets from the same seller and you had success, and the seller is giving you good deal overall. So So you just want to see, that how can you improve this asset? It's a holistic view of how can you reduce your expenses and how can you increase your income. From the current, and all this information can be derived from T-12, rent roll, and OM that broker gives you. Are there any unique or significant developments regarding the market? I mean, it's an emerging market, something new coming up, maybe a new casino coming up, or maybe new industry moving into the area where a lot of jobs are moving into the market, which can give a bump to your NOI. So at a high level, again, these are higher level recommendations. And as I said, if anybody wants to talk to us, let me see if there are any questions. I don't see any more questions right now. Feel free to ask if any. If you guys want to schedule a call with us, feel free to schedule a call with us. We have free underwriting sessions on Saturdays, every Saturday, where we go deeper. We take an example and go into this analysis at a much deeper level. And then if there is anything that we can do for you in terms of you becoming part of an inner circle where we accelerate your growth, we almost guarantee that within a year you would get into a deal. Otherwise, you continue to hold your hand for as long as it takes. So we have an inner circle. We call it, take the third QR code, scan it, and go from there. I do not have anything else unless you guys have any questions for me. We do these webinars every week. So to register for next week's webinar at 11 o'clock Eastern, go to cashflowchamps.com/webinar-registration or scan this QR code. And that's it from me, actually. Any other questions, guys? I see. So additional tips for newbie underwriter, okay? Ria, I know you are very excited today. So basically, you can get all the tips. Just join our Saturday sessions. We discuss all of them. The important thing is T-12, rent roll, and OM. Study them. On the T-12, you look for the patterns and see where is the anomalies. What are the causes of those patterns, right? And similarly, basically on rent roll, how much are you delinquent? And then underwrite the deal. I mean, we have SDA, from Michael Blank. That's what we use. That's an underwriting template. We take the data from T-12 and rent roll and put it in SDA and do that exercise to make sure that the deal is a good deal. Because it is very important for you to know before you go into a deal to make sure that deal is a good deal, because you don't want to burn yourself. So be conservative, be slow, because this is a larger number game. It is not few hundred thousands for a single family home kind of thing. Multifamily is a larger game. And we were talking about only multifamily today, guys. We were not talking about anything else. And I assume that everybody knew that, but this is multifamily investing is a larger game, and you don't want to be making mistakes there. You have to learn from those who have gone through this complete cycle multiple times. So yeah, that's all I have, folks. Thank you so much for your time. Appreciate it this morning, and see you next week.